Interest rates have gone up to 5% today, the highest level for 15 years. The Bank of England has announced a bigger than expected increase in the cost of borrowing to try to tackle the stubbornly high inflation rate. Well, immediately that's going to affect more than 1.4 million people on variable and tracker mortgages. Almost 2 million homeowners are due to get new deals this year. Here's the Shadow Chancellor, Rachel Reeves. She says it's a very worrying time for many families.
Already people were facing mortgage payments of £3,000 on average more than the rates they were coming off of. This is going to heap even more pain. If I was Chancellor today, I would be instructing banks to support customers by enabling them, for example, to move on to interest-only products, to extend the term of their mortgage and to halt repossession proceedings for 6 months.
So where does this leave people? People wanting a mortgage, people are on deals at the moment. Malcolm Davidson joins me in the studio, who runs Whole Moneyman. Malcolm, good afternoon.
Afternoon, Andy.
We knew that it was going to go up, the interest rates, but what do you make of it?
Well, we were hopeful that it would only be 0.25 until yesterday, and the inflation is not going anywhere. And that's why we've had the 0.5% rise. As I've said before on the show, we were quite slow to raise our interest rates in comparison to other countries. So if you look at the States now, their inflation is back at about 4%. We're still tracking double that, so slow out of the starting gate, and we really are paying for it now. And obviously we're fielding calls from anxious customers, really concerned about what's going to happen to their monthly outgoings.
What are they saying to you then?
Well, I suppose it's what we're saying to them, because they're not oblivious to it. So this is different to quarter four last year with the Truss mini budget, when it was a real shock. This has been on the news for some considerable time. Rates have been coming down actually during 2023, and we've seen the return of these higher rates just over the past few weeks. And our advice has changed a little bit, which is to get yourself locked in as early as you can, which tends to be with many lenders between 4 and 6 months before your deal expires. And the reason that advice has changed is that some lenders have now made their product switches cancelable. Now, you need to take advice, because that's not every single lender, but many of them do. So that means you can lock into a rate up to 6 months before and have a second roll of the dice prior to the expiration of your original deal, just to see if the situation has improved. But we're not saying that it might not necessarily be the case. It might get worse.
And well, let's talk about typical outgoings, because I was hearing some horror stories from people the other day talking about how much they could be paying in monthly mortgage payments. Are you seeing that?
Yeah, sadly we are. So obviously this is relative to the number of years remaining on your mortgage and the size of your mortgage. Obviously it's a lot worse in the south of England for people who've got those bigger mortgages, because the property values tend to be much higher down there. Rachel Reeves, they overheard 2 or 3 grand more per year. Yeah, that is pretty typical. We had someone this week with a £500 a month increase, and a couple of weeks ago with a £700 a month increase. So this is really, really significant. And it's not just the mortgages; it's the knock-on effects. Because yes, we had those double-digit interest rates back in the late 80s that some of your listeners will be fortunate to remember. But in those days, property values were much lower, so mortgages were smaller, and people weren't typically carrying as much unsecured debt as they do these days.
If somebody's got a mortgage rate that's going up by £700, they've got to find £700 a month more. What do they do? Where can they go for help if they need to?
Well, what we're finding is that the people are just making room in their monthly budgets, and this is probably why this policy, which obviously the Chancellor and the Prime Minister have made it clear they're not going to deviate from this policy. There's going to be no furlough scheme for mortgages. They're sticking to it. Well, this is putting a squeeze on people's disposable income, and there's not going to be enough money left to spend on those things. So your holidays, your evenings out are going to be cut back. People do know it's the first bill that they have to pay, and what's your alternative anyway? So if you're a first-time buyer, potentially you're in rented accommodation, well, your landlord's mortgage is probably going up as well. Well, guess what? That gets passed down the line to that tenant. So it's bad news all round, really.
A couple of questions, if I may, from listeners. Gary in Hessel says, question from Malcolm. I had an £80,000 tracker mortgage with the Skipton Building Society. I actually paid the mortgage off last month. Should I be worried about the interest rate rise.
No, you should be extremely happy because you've got out while the going was good, and what a fantastic position to be in, to be mortgage free. If you've got any savings, obviously that's where the good news does potentially come in, although the banks are a bit slower, by the way, to put the savings rate. So, interesting. Doesn't quite happen the other way around, does it? But no, other than the other natural cost of living increases that we're all suffering, now he's good to go, and fantastic position to be in.
All right, good news to you, Gary and Hessel. Graham says, hi Andy, I have a fixed mortgage that ends in April next year then. I am self-employed, so less choice. So should I just move to variable when it ends for a while?
Well, that's a few months away, so we don't. Obviously, that is a little bit too far away to be looking at switching deal at this moment in time. We're finding fewer people finding that option of going on to variable attractive because it keeps going up. Now, even though the listener is self-employed, if he's with like a high street lender, there will tend to be a product switch option within that lender that he'll qualify for irrespective of his employment status. So that doesn't matter how much you're earning, what your credit profile is. Most lenders will offer you a follow-on deal which you'll automatically qualify for. They won't move you onto it. You have to take action, you have to take advice, so it'd be right to reach out, but just a little bit early. We're looking at 6 months before expiration.
So if somebody's got they're on a fixed rate mortgage at the moment, it's ending in 6 months' time, they should now be asking questions, should they?
Yeah, they should be fixing in, or they should be taking advice and fixing in, but checking that deal is cancelable to have that second roll of the dice nearer at the time.
And what deals are there at the moment?
Yeah, they're nudging upwards. So obviously we saw the 6.5% rates at the back end of 2022. The city seem to have more confidence in the current administration. The lenders were looking to lend right the way through January, February, March. We saw rates falling. The lowest rate we saw was just sub 4%, and that's not very long ago. We nudged back up above 4 and above 5, and now we're seeing rates nudge back up above 6. We're pretty much back into that territory that we're in under Truss and Quarting, and we know what happened there, but I don't think it's going to happen again.
And what about first-time buyers, finally, Malcolm? What's the situation like for them?
I think with first-time buyers, you've got to consider your options because you can't stay at home forever. We've looked at the impact of, we've talked about the impact of rents. That's just going up and up and up, and there's far fewer stock available because some landlords are bailing out of the buy-to-let industry because they're finding out they can't make it profitable. So you know how resilient this market is. So people are obsessed with buying properties in the UK, and if the rent is comparable to the mortgage payment, which it is, we're still seeing first-time buyers continue to want to do what they've always done, which is buy their first home together.
Very interesting. Thank you very much indeed for your advice this afternoon. Malcolm Davidson there, Whole Money Man.